Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Wednesday, July 14th, 2010, and it's time to look at the charts again. Okay, starting off, let's look at the FTSE. This is the London Financial Times Index. This is obviously overextended, overbought, overpriced. You can just basically call it whatever you like. This is just a horrible, horrible, easy short. And we recommended yesterday that you start shorting today. And that's the market starting to roll over here. It doesn't mean it can't continue to go higher. It doesn't mean that at all. It means it's just unsustainable at this level. So we're going to be focused on this one a lot. I've said before, I really like this chart for a short. This is where the Europe financial crisis and all that stuff is really going to weigh on this chart more than any other. So be keeping an eye on this. And if you go to our free website at perfectstockalert.com, there's the address for you. Tonight we've got a video coming out that's a ETF alert that's going to be tracking the FTSE. All right, so if you're looking for that kind of thing or a way to play the FTSE if you're trading from the US, we've got it for you. Okay, awesome. And I'll probably put it on my top pick as well tonight, so you can see that on our website as well. It's all free. Thank you very much. And let's move on. Quick look at the Dow Jones Industrial Average 6-month chart. Each candlestick is 1 day. You'll notice today the market showed some hesitation. We had news out from the Fed that the economy is actually being revised lower. Their growth prospects for the rest of the year are revised lower. They're concerned with unemployment. Well, duh. And now they're looking for different options to deal with a double dip. Which I have a question. Why is it they're on the news all the time saying no double dip, don't worry about it? We've got Europe under control. It's not a big deal, and now they're sitting there looking for different methods to stimulate an economy if it starts to roll over. Why are they so concerned with it if it's not an option? Because it is an option. Yes, they're lying to you. Big shocker there. Okay, you've got 1, 2, 3, 4, 5, 6, 7 days to the upside, consecutive days to the upside of the Dow Jones Industrial Average. We told you yesterday 6 was the high average. Anything above that was an easy short. So if we had 6 yesterday and 7 today, I'm probably going to short. All right, you'll notice also, let's see, the chart right here. Oh yeah, another indicator telling you this is now overbought. Just if you're a bull and you're don't know anything, when it gets up here, you need to keep a real tight stop, okay? That's all you got to know. And don't tell me that, it's going to go to a new high. Look, it's overbought. It's 7 to the upside. Nowhere else on this chart does it do that. I'm thinking you're overly extended. Note the volume. Scroll on down. Oh, look at that. There's no smart money behind this. There's just retail. That means that the guys that know what they're doing, yeah, they're bearish. You see right there? They're selling this guy. Yes, they are. All right? Dumb money is buying. They think it's going to go to new highs, but it's not. Now, unless you think that smart money is there to help retail and make them money, which they don't, then you need to be really concerned with your long position right now. Now, something else you might want to notice. Let me get those out of the way. Take a little line, draw it right here. All right. Let's grab that tool again. See what they're selling right here? These 2 days? These 2 days. All right. Draw a line straight across, horizontally across the close of this day, and you will find it corresponds with this day and this selling the same level. You will also notice that's where we stopped, this little bump to the upside. Why? Because everything above this price is what smart money considers an easy, perfect short. That's the level at which they're willing to stomp on you, okay? See, you bumped up here before, they killed you, all right? You can bump up here again, and guess what? They'll kill you, all right? Okay. The main thing to take away from this video, it's no longer safe to bet on the bounce. The move to the upside is played, okay? Yes. Quick look at the the Nasdaq 6-month chart. Each candlestick is 1 day. You've got 1, 2, 3, 4, 5, 6, 7 consecutive days to the upside, finding resistance at the 50-day and the 200-day moving average. You'll notice they did cross over today. That's called a bearish crossover. It's not a good sign. It's a bad sign for the overall markets. We've talked about this before. And like I said, you've got 7 consecutive days to the upside. So that's above average to begin with. You're going to have to what? Oh, that's right, short it. So this is officially where I would say it's time to short, okay? Now we still have lots of earnings out there. and earnings can give you more of a lift. That's fine. They can also take you down. But in the basic thing to understand from this point is if you're long this market right now and you're just holding because of earnings that might come out tomorrow and help you lift a little higher or might come out next week, you're gambling. All right. The chart is telling you no, stay away. You're above average conditions, unsustainable, not a good place to be going long. Okay. The chart, you can't argue with the chart. All right. It's just the facts of life. Again, we'll notice the reality here of where smart money is willing to short. Big selling at this level, this price, okay? You bounce above it, they knock you down. You bounce above it, they knock you down. Now we've bounced up here and we've hesitated right below it, okay? Nothing bullish about this chart whatsoever. Main thing to conclude here is that I will short anything from this point and higher, okay? As will smart money. It's the same thing for the Dow Jones Industrial Average and the same thing for the NASDAQ, okay? Okay. Have a look at the S&P 500 large cap index. We've had 6 consecutive days to the upside, but today the market closed down just slightly for this particular average, and that resets the count. So if you had 1, 2, 3, 4, 5, 6 consecutive days to the upside, and now one day to the downside, that resets the count. Okay, this could still actually move higher. All right, and I'm going to hold off on my entering this short. It's not as easy as the other ones. All right, so I'm going to hold off on this one index. I've already got short position in it, so I'm not really in a big hurry to add to it at the same level I've been adding to before. But you'll notice again the same level. Okay, here, here, right, and the volume corresponding smart money, and that's right there, that same point. Okay, yep, that invisible resistance level we told you about a few days back, it's still there. Okay, now you can bump up into it, but they're going to kill you when you do that. All right, so here you're in the same situation, just shy of it. You can short here, but I'll wait and just see if I can get a little bit better price. Okay. If you've not been to our free website at perfectstockalert.com, it's right there, 100% free. All we ask in return is you refer a friend. That helps us stay free. Also, please subscribe to our YouTube channel. We love what we do, but we need your guys' support to make sure that we can continue doing what we do. And our website yesterday shows that you guys have been showing your support. We broke every traffic record we have yesterday, and that is because of your guys' support. You're sharing our videos online, you're referring your friends. We need that support. We appreciate that support, and it makes us work that much harder for you. So thank you very much. God bless. Enjoy your evening. And before you go, let's have a look at our disclaimer. The disclaimer. The information provided here is our opinion only. The Fed probably lies to you more than you think, and the news is not to be trusted. God bless, enjoy the evening, and just keep looking for shorts.